Hello and welcome to Morning Trade with Money Control. I am Nandita Khemka and I am here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So guys, if you have any queries, do send them in to us with hashtag AskMC and we will have them answered by our experts on the show. But before bringing our guests on board, let's see what the global handover is looking like this morning. Well, U.S. yield spike hurts Wall Street. Two-day rally fizzles out as the 10-year Treasury yield hits its highest level since 2008. Now, shares of Tesla fall in extended trade after third-quarter numbers miss expectations. Moving on to Asian markets, they also open lower and the SGX Nifty indicates a triple-digit cut for the Indian market. European markets snap a four-day winning streak as traders digest new UK inflation data, the prospect of more interest rate hikes and a mixed batch of earnings reports weigh in on sentiment. Back home, the rupee sinks to a fresh low against the dollar, marking its biggest single-day fall in over a month. One US dollar now is equivalent to more than 83 rupees. The Indian currency has lost 12% so far in 2022. Among the stocks in focus today, we have IndusInd Bank, Havells as well as Bharat Electronics. Also on the show, we get you top Diwali picks from Religare Broking. Well, let's bring on board our guest for today. Siddharth Bhamre of Religare Broking is joining in. Good morning, Siddharth. Good to have you on the show. Before I come to your Diwali picks, I want to ask you about the markets. This Samvat has been pretty volatile for the markets. When you look at S&P 500 globally, in fact, markets have taken a sharp knock. S&P 500 is down somewhere around 25% for the year. But if you look at the Indian markets, they are just about down somewhere around 4% or so. So would it be safe to say that we've decoupled from the global markets? And how do you expect the markets to pan out in the new Samvat?
Good morning, Nandita. Thank you for inviting me on your show. So yes, I think this is extensively discussed since last couple of months that how we have been decoupled, at least from stock market performance, if not, economy at large. And, the prime reason for this, Nandita, is the domestic consumption story. And earlier, the domestic consumption story was not about India, it was also about China. And there used to be, accordingly fund allocation by foreigners. But China is suffering through its own problem, be it, slowdown or crash in housing space over there. And even, COVID-related protocols are still being followed. So that leaves India as, a spot of oasis in the middle of desert where, globally there are so many challenges. And that's the reason there has been, outperformance in market. Even if you look at macro numbers perspective where world is struggling to stay in positive zone, India is still growing at 7%. The negative aspects which people want to highlight is that no, it won't grow at 7%, it will grow at 6.9 or 6.8%. But look at the growth. And we are not any, a mid-sized economy. We are fifth largest, which clearly suggests that, no fund would ignore us. And that's the reason you are seeing that despite so much of mayhem in markets, we are not seeing an aggressive selling by FIs, which we saw in month of October, November, December. And we are seeing this kind of outperformance. Also, from shorter term perspective, I want to highlight that a lot of people are talking about there are too many shorts in system and that's negative. See, shorts can be speculative in nature or they can be hedges. And our take at Religare is that these shorts are not speculative shorts. Because world is going through problem and there can be any a knee-jerk reaction, and that is the reason most of the institutions have hedged their portfolios in India rather than selling it out. So don't think this as negative, and we are quite optimistic on market. Dips may come because of volatility, because of external factors, and those dips should be bought.
Buy on dip is the strategy according to Siddharth. But Sid, what are the chances of the markets hitting a new high in the new Samvat?
Well, that's anybody's call. Our take, Nandita, is that probably, Nifty can hit around 19,000 levels in next 1 year. That obviously, is above all-time high. But then from 17,500, 600, stating 19,000 is not a very big target, right? I'm talking of less than 10% upside over here. Because globally, other economies are struggling. Even if we hold on to our grounds, plus minus 5-6% here and there, I think that would be a great performance look on the backdrop of what is happening. So yes, new high may not be a big challenge, but if someone is anticipating that you would get 20-30% return in stock markets, at least on the index level in coming 1 year, I think that would be a bit challenging.
Right. Coming to your Diwali picks, Siddharth, I can see you have quite a few large cap names like Asian Paints, HCL Technologies, Maruti Suzuki, UltraTech Cement, United Spirits, and among the mid caps you have Dalmia Bharat, Kansai Nerolac, as well as NAM India. But let's talk about your large cap picks in the particular. HCL Technologies is one of the stocks that you have recommended as your Diwali pick. Given the fact that we have seen quite a bit of drubbing coming in for IT stocks, what is the rationale behind your picking this stock as your Diwali pick?
Yeah, so you're right, Nandita. If you look from beginning of this year, calendar year, IT space has significantly underperformed. And reasons for that is that there was a lot of attrition which was happening, the cost of employment was going higher, and people were talking about slowdown in US. So, and the stocks had become expensive as well. Stocks which were quoting at 20-25 times multiple were trading at 30-35 times multiple, and those were their peak valuation in recent past. Now, what we have seen because of this correction from month of January 2022 till end of September, which is where we took call, Anita, that probably the underperformance of IT might be getting over, which was more of statistical call, and it is turning out quite well. Uh, so we are not negative on IT. We believe that the underperformance which IT has shown in last 1 year, that is behind us. At best, it can be a market performer or it would outperform market. And why we are thinking so? Firstly, though people like us may not be so very optimistic. When I say people like us, I'm talking about market participants about IT space. But if you look at the commentary of each and every management, it was very positive. They are talking about growth coming from North America, where people are talking about recessionary fears. So you can understand that people sitting in cabins can have great opinion about the slowdown in US and recession in US, but people who are actually doing business are quite optimistic. So this fear of a big recession, I think, is overplayed, and we believe that the growth in IT space would continue. The attrition, which was acting as a negative factor last 8-10 months or probably more than a year now, will now start acting positive, because most of the company management are suggesting that the attrition are at peak level, and from here they can go only one way, which is down, and which would be margin positive. Also, if you look at some of the top managements of IT companies mentioned that the falling rupee has aided to their margins. So what we are anticipating is steady revenue growth, but expansion in margin, which would lead a slight re-rating of these stocks which have corrected. Coming to HCL Tech numbers, at FY24 earning of 14 to 15 times, this stock is quite attractive valuation perspective. Historically, it trades at discount to Infosys and TCS, but I think we can expect a PE of around 18-19 going forward, which ensures that we get 30% upside from current levels, and that's the reason HCL Tech is a buy.
Right, outlook looking buoyant for these tech firms that have been beaten black and blue. That's according to Sid. So moving on to your mid-cap pick, one of the picks that I can see is NAM India. What is the outlook, or what is the rationale behind picking this one?
And the mutual fund sahi hai, and that that's the theme, and I understand that very well. What has happened in mutual fund space, Navya, that direct selling is increasing. Though AUMs of companies are going higher, we are not seeing revenues moving higher. But at the same time, in last 3 years, what these companies have done is they've cut down on their expenditures, and that's the reason you are seeing, despite decent rise in AUM, you're not seeing rise in revenue, but there is rise in profitability. So we are reaching an inflection point where you would start seeing incremental rise in revenue with rise in AUM, because the margins in these companies are coming down. And especially if I have to talk about NAM India, why we are liking it, it has a market share of 7.4%, and that market share is growing. And that market share can only grow if there is performance in your scheme. If you look at these schemes of NAM India, at least in three spaces where a lot of AUM concentration is there, they are among the top performers, and they are attracting a lot of portfolio investors. their concentration this time is more on ETF, which may have less margin, but at the same time has less management cost also. So we are seeing a decent traction happening in this space. Stock has corrected, hasn't been a big underperformer, Nandita, and at 265, 270 levels, we feel that the margin of safety in NAM India is very high, and we would suggest to buy. We do have aggressive target price, but as of now, we are anticipating that it can move towards this 330, 340 odd levels, which can give you a neat 30% plus.
Well, indeed, mutual funds sahi hai, and of course, domestic investors have been pumping in money even as FIIs have been withdrawing. Thanks a lot for joining us this morning, Sid. Wish you and your team a very happy Diwali.
Thank you so much, and wish your entire team and you happy Diwali as well, Nandita. Thank you.
Thank you. Let's move on and bring on board our technical analyst for the day. Chandan Taparia of Motilal Oswal is joining us this morning to discuss about all the stocks that are hogging the limelight at this juncture. Good morning, Chandan. Before we head on to the stocks, let me ask you about the market setup. We had seen a 4-day rally play out on Dalal Street. Everybody was happy about it because going into Diwali, the mood was pretty upbeat. But this morning, the cues are not looking all that great. We saw the rupee tumble to 83 versus the dollar yesterday. That was a negative surprise. And then we are seeing the US yield spike. And because of that, we've seen a drop on Wall Street. And globally, also, things not looking that well. Where do you see the Nifty this morning? Do you expect it to take out levels of somewhere around 17,400 on the downside?
Good morning. We have seen decent recovery in the market in last couple of days. Just couple of days back, Nifty made low near to 16,750 and 16,950 marks. And for last trading session, it completed the immediate retracement zone near to 17,580. But it failed to hold at higher levels, witness some profit booking. Actually, the good part is the dips are being bought in the markets. But due to the global concern, the follow-up is totally missing. So we believe that decline could be bought and upside could be restricted, and because of that we are likely to be in a broader range. So I believe that any decline to us 17,350 to 17,400 could be utilized as a buying opportunity. In that case, one can put support near to 17,250 and we can look for a move of 17,580. So we will play with range of 17,250 to 17,580 zone for next 2 to 3 trading session in the Nifty index.
Right. Talking about specific stocks, Chandan, IndusInd Bank came out with a decent set of numbers yesterday. The stock has gained over 30% year to date. Do you expect more upside on this counter given the fact that it has reported steady performance on the asset quality front as well?
Exactly. The IndusInd Bank is one of the strongest counter we have seen recently, which is slow and steady, moved up. However, on the last trading session, it remained consolidative because Bank Nifty also witnessed some profit booking decline. If I look at the price structure, overall price sentiment is positive and we are expecting some uptick in the counter. So one can put support near to 1192 and expecting this momentum to extend to us 1260, 1275 kind of level on the upside.
Right. The next counter on my list is Havells India. Didn't really report a great set of numbers. Profits dropped by about 38% or so. Stock is down somewhere around 11% in the last 1 year. Do you expect the weakness to continue?
Yeah, Havells is one of the weakest counter, and even at the time of market recovery, this stock failed to see the uptick. Profit booking decline is continuously witnessed. Even in the derivatives data setup, shorts are being built. Stock is making lower top, lower bottom, and again the negative sentiment could continue. It has measured hurdle near to 1280 kind of level, and stock has potential to drift down to us 1200 marks.
Right. Next one I want to talk about is NHPC. LIC has offloaded somewhere around 2% stake in the counter via open market transactions. Now, when you look at the stock, it was under pressure in yesterday's session, but over the last 5 sessions, it has seen decent gains to the tune of 5.5% or so. How does it look like on the charts for the next 3 to 6 months?
Actually, this stock is moving in a range where some support-based buying is there, but follow is totally missing. And especially given the scenario when many heavyweights are trading at the discount, people have tendency to participate in those blue chip counter where they have margin of safety. So, but yes, NHPC overall dips could be bought. We have major support near to 37.5, 38 zone, upside potential towards 42.5 to 43 marks.
Right. And the last stock on my list before we move on to the queries is Bharat Electronics. The company has bagged an order to the tune of 8,000 crore rupees. The stock has given a 50% return on a YTD basis, Chandan. Do you expect more upside here?
Yeah, so if you talk about BEL, the defense are in focus and most of the defense companies have done well. Whether you talk about BEL, HCL, VDL, MTARTIC, and again, the government is focusing more onto the defense and making India kind of thing. So that will be positive trigger for the company as a whole. And so setup is positive. Already we have seen good run up. It is major support near to 100. So any decline could be bought for an upside move towards 112 to 115. So overall positive bias. Any decline could be bought with support of $100.
Right. Let's now move on to all the viewer queries that have been trickling in, and there are quite a few. Let's start with Inox Leisure. Ashok Kandukuri has written in and he wants your view on the stock. Now, the stock has been in a steady uptrend over the last few months. What do you think he should do with this?
Yes, overall, the immediate short-term trend is positive, and the update of Inox PVR were also finding some buying interest to the counter. So I think he can continue to be with long position. 500 is the immediate support, and we believe that slow and steady it can head towards 545 to 550 marks.
Well, the next one that is coming in is from Hari Krishnan, and he wants to know about UltraTech Cement. We saw the cement maker report weak set of numbers yesterday. Should somebody look at selling this counter now?
Actually, this stock is not in bad grip, but yes, consolidating upside is being kept. So I think decline could be bought rather than selling it now. Better to use the decline to buy, because I believe that support-based buying could be there in the market and this counter as well. So right now it's quoting near to 6,400. Any decline towards 6,100, 6,000 is the buying opportunity for the next leg of rally towards 6,800 to 7,000 marks.
Right. Next one is on Suzlon Energy. Sanjay Chaudhary has written in and he wants your view on this counter. The stock saw a 20% up move yesterday. What do you suggest he do with the counter?
Yeah, so disclaimer will be there for such kind of name, but yes, due to the corporate action, the stock is in limelight. However, it has been very volatile, but if I look at the chart, some sort of buying interest is visible. Recently, it managed to hold the higher base near to 7.58 marks. On last trading session, it rallied by 20%. Given the price structure on the daily and the weekly strength, we believe that once stock can head towards 12 to 14 level. So can ride the move, but one need to understand this is the counter which has fallen down so much in the recent past. If I look at the last 3 to 5, 8 years, but yes, the support is now there. 7 is the support for uptick towards 13, 15 levels.
Next one is from the banking pack. Rahul Das wants your view on AU Small Finance Bank. The company came out with its earnings yesterday and it saw an over 20% rise in profit in the September quarter. The stock was pretty flat in yesterday's session. What's your view here?
Actually, we have seen good run up in counter like Federal Bank, SBI, Canara Bank, Axis, ICICI. But AU is not comparatively performing. It's underperforming the entire banking name. So I'll avoid going long here. Rather, I'll select other names which are showing the strength with momentum and breakout. So AU is showing the weak structure. And especially when market is correcting from high, the stock can correct down as well. So 600 is the downside where it can slip from current levels.
The next one is coming in from Prasad Nayak and he wants your view on RCF.
Yeah, so like if I look at the RCF and other fertilizer name, good momentum I have noticed. Especially if I talk about the Deepak fertilizer, good price consolidation breakout is visible on the daily and the weekly chart. So if I look at the RCF, stock is finding hurdle near to psychological 100 marks, so above 100, momentum could drive towards 111 to 115. But yes, overall, still one can buy at current level, can average above 100 with support of 92 level. So with support of 92, 100 and then 111, 115 could be the upside potential target if someone is looking for positional point of view.
Right. The next one is coming in on the auto pack. Shakti Singh wants to know your views on Tata Motors. With the chip crisis and challenges easing, do you expect this stock to do well going forward over the next 3 to 6 months?
Actually, this is one of the weakest counter in the auto pack, including your Motherson Sumi and other name. If I have to pick auto name, then I'll go with the TVS Motor, Eicher Motor, and Escorts counter. So Tata Motor, which is under pressure, making lower top, lower bottom, call writing is visible with short built up. So here I'll avoid or even stock and correct. So as of now, looking at the price structure, it can first dip down to 380, 385 level. From there, it can move, but we have multiple variant near to 415, 420. So above that only stability could be there. So I'll avoid to pick on Tata Motors. Rather, I'll try to be on TVS Motor, Escorts, HCL Motor to play the momentum and the relative strength of the entire sector.
So avoid Tata Motors, that's the call from Chandan. Well, that wraps up our query segment. But guys, if you have any more queries, do send them in with the hashtag AskMC and we will have them answered by our experts. Coming to your stock picks this morning, Chandan, what are you recommending for our viewers today?
Yeah, so in such kind of market, one have to be very selective because market has seen good run up from the lower levels, but again, limited upside could be there. So I'll focus on a couple of names. First, I'll talk about TVS Motor. Already we talked about the auto name. So this is the counter which is continuously outperforming. 2-3 days back, it gave a consolidation breakout of last 15-20 days. So TVS Motor is suggested to buy towards dip of 1150 with a stop loss of 1120. Look for a target was 1220, 1230 level. ITC is other name where we are witnessing positive momentum. Major trend is positive. The stock is witnessing put writing activity. So any decline towards 340 is the buying opportunity for an uptick towards 365 level. So TVS Motor, ITC, and apart from that, one can focus on the cements. Capital goods counter are in focus, and cements is one of the counter which recently bottomed out. So here one can buy and look for around 4 to 5% upside from the current level. So cements has potential to move towards 3,000. So TVS Motor, ITC, and cements, these are the names where we have positive bias in the market.
Well, those were the picks that Chandan has recommended for our viewers. With that, it's a wrap on this edition of Morning Trade. But thanks a lot for joining us, Chandan. And I would like to take this opportunity to wish you a very happy Diwali. Well, guys, don't go anywhere because coming up next is Markets with Santo and CJ. Stay tuned.